Hi, this is Randy Finney with the Right Side of the Chart, and today is August 24th, 2017, Thursday. It's about 3:11 now. This is the second attempt at this video. I have a member on the site had pointed out, and thank you for that, that the audio was not recorded in the last video. I usually check that to make sure I that do something to my computer today. I popped out the unplugged the mic temporarily and forgot to plug it back in. Sorry about that. So let's do this video. At least this one might go a little bit quicker. I'm going to go over QQQ and leading FAAMG stocks: FAAMG, Facebook, Amazon, Apple, Microsoft, and Alphabet, which trades under the tickers GOOG and GOOGL, hence the FAANG acronym that I've given to those stocks. They collectively represent nearly half of the performance of the QQQ, the Nasdaq 100. They represent 42.58 as of the latest reading. Used to be over half, and now it's just under half. But still, that's a very significant weighting. So I'm going to go over the charts. We'll just stick to the daily and 60-minute time frames, and I'll show you some of the developments that I'm watching for right now in both those leading stocks as well as QQQ. Before we get into that, I'll just jump on something real quick. A member on the site just asked my opinion. Back on July, it was late July, right about here, I pointed out some what I thought to be very compelling and high probability short entries on the airline stocks. I haven't done much follow up, but they continue to fall. We've got a couple at support right now. Again, check out that video. Let me tell you where it was. Look at another monitor. July 21st. July 21st. It was the airline sector analysis and trade ideas video and covered XAL and some of the components. You can see since just a beautiful. I mean, this is the at the time I had posted this as the price target. You can see the wedge there, widest part of the wedge, added it to where I expected the wedge to break down, and boom. So we're right there at support. One of the members of the site asked about one of the stocks. I think that one might have a little more downside. Maybe not. Obviously, they're going to bounce soon. They're very overbought. I'll run through these charts real quick. There's Delta Airlines. Again, these were all pointed out here on July 21st, just before they broke down. Textbook price action so far. Impulsive selling. There's a little kickback rally and the next leg down. So there's Delta, Southwest. That one is slicing through the support level. This may prove to be an overshoot. If not, that'd be my final target down there. If it's an overshoot, that means we're going to come back and either close probably tomorrow up above it. If not, there's a little more downside. So my thoughts were is these guys are in a death spiral right now. This was the one of the members asked about AAL, American Airlines. It's coming up to that target that I had there, but I can see the possibility that eventually works its way down here. Now, let me be very clear. They are going to have a very sharp snapback rally sooner than later. These are extremely oversold. And the more overstretched you get, oversold, it's like a rubber band. That rubber band is going to snap back harder. So don't be surprised to see a 5-6% plus snapback rally, but I just don't see enough evidence in the chart to say a bottom's in. Now, you talk about objective long entry. Here's UAL. This one broke down, back tested that wedge I covered, and it's at a very, very solid support. Look at all these reactions back here. So you can step in if you want to take a shot. Again, yeah, 60-minute divergence, potential divergence. That divergence, my guess is going to be confirmed on a gap up. And in fact, I like this one. I think I'm going to take a little position of this real quick. Pause the video with a stop somewhat below on a daily close below that level. Okay, that is done. Took a little starter position there. But the rest, like I said, I'm not, these won't be official trade ideas right now because they are in free fall. And a couple of them still have a little bit more potential downside in there. But again, snapback rally is coming soon. So to each its own, if this is your cup of tea and you're okay with the fact, because if you get in just a day or two early at this rate of descent on these guys right here, depending on where you put your stop, you may be stopped out. So I'm willing to give that one a little room. And again, I'll come through these when I get a chance. Let's get back to the charts and finish up this QQQ video once more. All right, daily chart, bigger picture, divergent high, possible buying climax. If you note the volume down here, you can see this big volume surge over the last couple of months. That's indicative of a buying climax. And where that is important is it helps formulate the longer term outlook. Because if we get, right now, I'm just looking for a potential small pullback. Oh, sorry, distraction there. Small pullback at this time, but I'll go over where some of the targets are. But again, the potential's in the charts with this divergent high. You can see here a series of divergent highs and corrections in the past, and it's something I've pointed out many times. Simple wash, rinse, repeat, divergent high, correction. You can see here a divergent low. It's not labeled here because I had the word correction there, but that divergent low led to really this whole thing. There might have been some smaller divergences in there, but again, the primary trend is up. So it just took a little divergent low there to spark that, at least that initial rally. It came up, and again, within the larger trend, and this is the point I try to impress. There's a difference between swing trading and investing, especially on the short side or counter trend trading, whether it's you're trading a security in a bull or bear market. These are counter trend trades, and you can sit here all day long and get nice swing trades off divergent highs and lows on the daily and 60-minute time frames, and that's what's pointed out here. So um, point being, we have now double negative divergence. This is the largest divergence we've seen in a while. We had a divergent high there, and we did have a little correction, a little pullback off that first divergent high, but the market's pushed on up, made a marginal new high, and now we have double negative divergence, or two consecutive divergent highs. And although anything's possible, divergence doesn't have to play out every time. It doesn't all the time. It does the vast majority. I'd say easily over 80% of the time, divergent highs and lows, once they're confirmed, meaning you have that bearish cross, a second, a higher low for positive divergence with prices making a lower low. And by confirmed, I like to see that PPO crossover and confirm that higher low. Otherwise, when you're heading down, um, right now when you're looking at negative divergence, that the PPO is still heading up. In other words, back here at this point, it was still heading up. That divergence wasn't confirmed until we turned back down, made a bearish crossover, and then put in a lower peak, a lower low against prices making a lower high against prices making a higher high. Okay, let's look at a clean version of this chart now. Strip away all those other previous divergent highs and lows and everything else and focus on what we're looking at now. Again, you can see the volume surge, potential buying climax. Disregard this wedge. That was a falling wedge, which we popped out, and that gave us a run up to the most recent high. But what we're looking at here, we're looking at this clear negative divergence right there. You can see the divergent high. And this trend line goes all the way back to, it looks like June 2016. And you can see quite a few reactions to validate the trend line. Starting with the first one, we had a few over here. These were close enough to consider reactions, but that was the actual tag right there, one tag there. Now, the difference between what we're seeing now, a lot of these, you have these strong advances off the tags of the trend line like you did here. Lately, we've been dancing around. You can see that. We've come back and visited this trend line, and we're dancing around on it. So that's something to watch. And this is a significant, much more significant and important than these 60-minute charts that I'm going to get to in a second. Those help gauge the near-term direction. But if this gets taken out, again, this is a multi-year uptrend line, and that's a pretty significant level, and that can bring us down to any or all of these. I would have my minimum target right now, if that trend line breaks, 136, with the potential for a move all the way down to 130.20, somewhere in that area. Those are targets. So that would be probably the most important development. And this point I cannot impress enough. You need to see a break, ideally an impulsive break. In other words, these big red candles, these big green candles, those are impulsive moves with, especially on increased volume. So you want to see an impulsive break and most importantly, a close below. When trading any time frame, whether it's a daily, weekly, 60-minute, 5-minute chart, I like to wait for a confirmation by a candlestick close on that same time period. So in other words, on a daily chart, you want to see a daily close. Why? Because anything less, it's not unusual to see an intraday break. Go back here, we had two candles. You can see these two red candles, these dojis. We pierced their intraday, but managed the market managed to come back up, the QQQ, and close right on or above the primary uptrend line. So those were false breakdowns. Whether that was just what the market was doing, or whether it's the powers that be, the big, institutional trading desks that have enough money to move the market around and see the stops. Maybe they take it down, run a lot of stops, go long, computers game it for a quick bounce. I don't know. Doesn't matter. The important thing is traded for a long time. You sharply increase the probability of a trade, a sell signal, or a buy signal for that matter, if you're looking go long on a downtrend line or a bullish chart pattern, if you wait for a candlestick close that is above confirming that breakdown or breakout. All right, let's go to the 60-minute charts. We'll try to go quickly since I'm already behind touching on the airline stocks. This one's kind of busy. It's something I've showed many times in the past. It's a simple wash, rinse, repeat process with, on the 60-minute charts as well with these divergent highs and lows. Go long on the divergent lows, ideally with a buy signal breakout. A divergence in itself is not a buy signal, but when you couple positive divergence with a trend line or chart pattern, bullish chart pattern breakout, or you couple negative divergence with a bearish chart pattern breakout or trend line breakdown, then you have a higher probability sell signal. Something I do want to talk on real quick is there are times, they're rare, but there are times where the charts are very much in alignment. And I'm going to focus right after this QQQ chart here. We'll look at one more 60-minute and I'll get to the FAANG stocks. A few months ago, back in June, they were in alignment, and I was harping over this, doing extensive up-to-date coverage. It's something I hadn't seen in a while. All of the 5 market-leading FAANG stocks had the charts were in alignment. They were all walking up um, clearly bearish chart patterns. They had uptrend lines to watch. They had negative divergence, and they all broke down on the same exact day. That was the biggest drop we had. That was back on in early June. We had the biggest correction so far in 2016. And I want to make very clear, as I did at the time and as I did in advance, that was not mere coincidence. The press tried to assign any headline or reason to the big drop that they could, but it was clearly a technical event, almost impossible to argue if you go back and look at the analysis at that time. So we broke down there. Unfortunately, we don't have that right now, and that's what I'm going to get to. I see a mixed bag on the technicals between at least on the 60-minute time frames of the market leading FANG stocks. And QQQ is sort of grinding around between support and resistance. I'll get to that here in a second. So as we go through this, I'll highlight those breakdowns on the other market leading FANG stocks. But here we are today. Let me give you a cleaner board here. Okay, this is the 60-minute chart. I put up a few iterations of this one recently, starting with back here a couple weeks back. We had potential at the time, potential bullish divergence I highlighted and said that if we moved up and turned and confirmed that divergence, it would probably lead to a bounce. And if we didn't confirm it, if it was burned through and breakdown, we'd go down lower. Well, we did confirm it, and that was pointed out shortly afterwards. At the time, I listed these 3 resistance levels, R1, R2, and R3, stating that most likely we'd see the bounce terminate on any one of these levels. And so far, that's been the case. Neither bulls nor bears can win this battle because we're still, I'll tell you, we need to see now the next big move will come if we either take out R3 or break below S3, that third support level. I think that will most likely, a break above R3 would open the door to new highs, where a break below S3 would cause probably some very impulsive selling, quick thrust down, and probably go back in here and test these early June lows at least. And that's quite a bit lower. So until then, we're in what I call technical no man's land. We're wedged between support and resistance, and we're likely to see the markets ground around a little bit. Might be frustrating if you're trying to trade those until we have a definitive upside or downside break from this recent trading range here. Let's see what's happened since then. I put up those levels again in advance, R1, R2, R3. You can see we went on through R1, came up to R2, and there's another good example of why I like to see 60-minute breaks and closes on a 60-minute candle. These are all 60-minute candlesticks here. You can see an intra-period pop above the R2 level, which is at 143.23. The next candle did the same thing. Both of those candles failing to print a close above that 143.23 level. In other words, they popped the stops, and that's probably not uncommon. If I don't pick these resistance levels randomly. I do a lot of studying into the charts and look at levels where I think are very likely to produce a reaction, act as resistance or support if tested from above or below, and that was the case there. We fell back, came back up, tried again at R2 and failed, and that failure was followed with 2 impulsive red candles. So far, we've recouped about half of that drop, but we're still below that level. And likewise, as I just said earlier, when I put up these support levels today, I put it up before we had even come down to the first one, and I said you need to see a 60-minute break and close below each of these levels. And if you do, each one will increase the odds, further increase the odds of the bearish case, although we really need to see this S3 go to see a big, pretty decent move down in the market, one that we can position short for as a swing trade lasting maybe at least several days, if not several weeks, possibly more. So that's where we're at. Again, we're sort of in technical no man's land here and expect a little choppiness until we take out those levels. And that's it. I don't want to make it any more complicated than it is. Each one of these is a near-term bullish event if we take these levels out. Now we've already traded through this R1 level a few times. I'm not putting a lot of significance in it anymore. I'm putting more of a focus on R2 here. I'll color that, pick a bright color. And at this point now, we need to see that S2 level get taken out and maybe even that reaction low there from today. But you can see as we slice through there and then close that candle right back above it, and that was bullish. We held support. We held it on a 60-minute basis. Again, that's the important thing. And so far, we've moved up every single candle since then today. Okay, I'm going to continue to talk fast, try to get through this video since I threw in the airline stocks, and I'm already behind my pace on the last video that the audio didn't come out. Here's a 60-minute of Apple. Basically, again, watch, rinse, repeat. You had a series of divergent lows back here. You had two divergent lows, which led to this big bounce, this rally. You can see the clear bullish divergence there in place. We've come full circle. We put in a divergent high there. We had a correction, put in a marginal new high, and that was yet another consecutive divergent high, and we corrected again. So now Apple's going to do one of two things. It's either going to take out and burn out those divergences. In my opinion, they haven't played out yet. Based on the scope of those divergences, they haven't played out in the form of the correction that I would expect. So Apple, despite the new and improved iPhone 8 coming out and all the hype about that, near term, at this point in time, I'm expecting more downside. But until and unless this is a pretty significant support level here. Sorry, I tried to use a shading tool for that. Just imagine these being lines. You can see this. The gap is all the way down to here, but this is the support level. I think that reaction high there, if that gets taken out, we're going to go down to this 148-ish level on Apple. And the daily charts, well, that tells us the bigger picture in Apple, and you can see the divergent high, clear negative divergence, just as we had negative divergence back here. That led to a 12% correction. That divergent high ended in a bearish rising wedge, and the bullish, and that was just a smaller bearish technical event within a larger pattern. You had here on the more a longer term time frame, you had this long term downtrend line. It goes way to the left of this chart here. This chart spans 2 years. Primary downtrend, breakout, and back test. So again, this is swing trading. You can swing trade long, you can swing trade short, you can do it in an uptrend, you can do it in a downtrend. Right now, I'm looking at a bearish larging wedge, a large bearish rising wedge, excuse me, that is about twice the size of this one back here. We had a little correction off the first divergence. There was divergence right there on those peaks, and you did get a pretty healthy correction, but we pushed back up, and now we have this bearish rising wedge and a break of this line on the daily chart. That would bring me down to those targets that I've been looking at here, about a 14. Well, that was back then, 14 or 18% correction. Let's see where we're at today. Now it's about a 617 almost and 21% correction if we hit those targets from where we're at. And that would, being the largest component in the QQQ, largest stock in the world, Apple would definitely have an impact on QQQ. All right, go through the rest a little bit quicker. There's Alphabet, Alphabet GOOG. You can trade either share class. The charts are going to mirror each other. The other one's GOOGL. Here's a chart. Let's take this out to go to a 4-year, no, 2-day 2-day candles, 4-year period, because I wanted to go back and show you where that trend line generates off of. It comes off of the early July 2015 lows. Very well defined. You look at this trend line, we have numerous reactions, well defined. This chart says a lot to me. This tells me even though Google isn't an uptrend, and unless these levels are taken out that I'm covering here, that's what the trend is. But you can see the divergence shown right there. I'm going to go back to a daily chart. It just cuts off that where the trend line starts from. So zooming in, that's what we're doing here. You have that multi-year uptrend line, and you have this very significant gap. That gap was already tested once from above. Prices failed there. So far, we have a potential double top high. So this is basically a sideways range. This is a very important level. Google's either going to make an upside break of that and continue on and hold this uptrend line support. If it breaks below there, then look for the safe bet is to see the bottom of that gap go, because most gaps, it's very common for a gap to be backfilled. And this one hasn't been backfilled yet. It was tested from above, and it's almost being tested again. So you could see a breakdown above the trend line that then backfills that gap and then snaps right back up in there, and you get one of those little whipsaw 1 or 2 day candlestick closes below there. So the safe bet here on Alphabet is to wait for a definitive break of both the trend line and the bottom of that gap, and on a daily closing basis, and that will help to support the bearish case in the Qs. And again, if all these stocks confirm, just like I was talking about back a couple months ago when let's see it, here it was. This is a 60-minute chart on Alphabet, and I told you how all those charts were in alignment. This was that big breakdown back in early June. They all broke down together at the same time. They all had this sharp meltdown selling. Um, you want to see the same thing if you're trading QQQ as a swing short, or if you're going long, you want to see the majority, if not all of those 5 market leading FAANG stocks. You want to see the charts in alignment. Right now, I'm seeing a mixed bag. I can see, I wanted to highlight here, this has been a wash, rinse, repeat scenario too. You can see these clear bearish rising wedges. There's 3 of them. Each had divergent highs, negative divergence, everything you want to see to confirm a wedge. Each was followed by a sharp sell-off and impulsive breakdown. You could have swing traded. This stock has gone nowhere for months now. In fact, it's trading below where it was a few months ago. However, we have a divergent low. We had a bullish divergence right here. We had a little pop, and we had another consecutive divergent low there. So right now, until and unless these divergences are taken out, near term, I have to say my outlook is more bullish than bearish on Alphabet, and probably move up here or somewhere like that if these divergences play out. Here's Microsoft. I don't have a very strong opinion. In fact, this one I don't have any opinion on the near-term direction. This has just been trading in a sloppy sideways trading range. I will say at the bottom of that range, if it breaks below that trend line there, that would be bearish. And obviously, if it can clear the top of the range, that would be bullish. Going back to that big drop, there was that big swoon down in early June. We had a failed bull flag breakout on Microsoft just before that happened, and then it took out this trend line and another trend line that I had back here. So right now, again, not much of an opinion, so I'm not going to spend any more time on that chart. Let's look at the daily chart, see if I have any notes there. Not not much, although I will say there's what I have here, it might be a little confusing. I have a trio of uptrend lines. I have this white uptrend line off the June 2016 lows. Several reactions. You can see a reaction back here, reaction more recently, and a reaction here. And I'm talking about this trend line I'm highlighting. Then below that, if that one gives way, there is this purple or magenta trend line, has quite a few reactions. And then a potential, we had a lot of reactions back here on this yellow trend line. It hasn't been visited since. It also lines up with some horizontal support. So if we do get a breakdown of Microsoft, I think we'd probably come in here and bounce around that level and watch that from there, maybe a breakdown if that occurs and a continued move down. But again, I don't have a very strong opinion on Microsoft, but that's what I see on the daily and 60-minute charts. Here's Facebook on the daily time frame. Same story. And this one you have even more lucrative swing trades. This one tends to move a lot. And of course, it's in a bull market as all the FAANG stocks are. But within there, look at these drops, 18%, 10%, 16%. And they all came, you guessed it, after divergent highs. You can see the divergence all marked here on the daily. Right now, we don't have divergence on the PPO, so I'm assuming it's probably not there on the MACD either. Those two look very similar. But we do have divergence on the RSI, so something to note. This line, this uptrend line, and this uptrend line form an ascending broadening wedge pattern. Prices are just rolled off the top of that, a little minor downtrend line. If this level breaks 166.10, well, this would obviously be your first support level, probably where you get a reaction, but ultimately probably come down here to that level. That would be my swing target. That's 143.75, and that would be a pretty healthy drop if we got down there. That'd be a drop of about 13 or so percent. 60-minute chart. On the 60 of Facebook, we just look at, I'm looking at what's appears to be a descending triangle pattern. Those are inherently bearish chart patterns, although they can break either way, and it's pretty bullish if they break to the upside. I really shouldn't have these divergence lines drawn here. Disregard these because the prices are making lower lows along with the indicators. So what you really want to watch for in the near term is either an upside break of that pattern or a breakdown below the bottom level there. I have a parallel support lines. So the lower one's about 165.77 or somewhere in there. So that's what I'm watching on Facebook. Okay, that covers them all. And again, there's a little work to be done. And until and unless, all these charts are in alignment or the Qs break above that R3 or S3 support level, R3 resistance, we might grind around for a bit because I'm seeing some potential bullish 60-minute charts on some of these top components and some potentially bearish. And I'm just not crazy about trading the indexes when the charts are not in alignment. But things can change quickly, and if they do, I'll do my best to get that out to you guys as quick as possible. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.